All right, what is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about natural gas and the bearish narrative that's really been driving prices down lower. We have this article here from Seeking Alpha, speaking of how it's just not meant to be. Okay, so we're going to dive into this article so that way you guys are aware of some of the bearish narrative and what's been pushing price down. Now, we are seeing a very nice rebound today. We'll go over that. Okay, we'll actually break down all of the charts, including this one right here, which is the most important. This is the spot price of natural gas sub $2 chart. I'll break down why this chart is so important. And this is really what got me interested in natural gas in the very beginning in the first place at all, right? And it was the strategy that I used to initially make profit. And so I'll break it down. It's very important, and you can, you want to monitor this chart right here in the future as well for the next opportunities. All right, if we take a look at the weekly chart right here, we're at a critical level, guys. Okay, you can see we have this uptrend line here. We broke through there. Now, the big question is, are we getting a look below and fail, which will be bullish, or is this going to be a retest and potentially push lower? We'll break down some of the things that I'm paying attention to on the weekly chart. We'll also zoom out here on a monthly time frame. There are a few reasons that I went long, okay, and one of them was being that we came down to the bottom of our previous supply zone, and we're looking for this to turn into demand. And we did get a very nice bounce today. Okay, when we zoom in on the 4-hour time frame, you guys can see that. So we're going to start off on some larger time frames so you guys get a bigger picture of the macro view, and then now we'll zoom into some of the smaller time frames. We'll of course go over Boyle and the potential scenarios here for Boyle. We'll break down the key levels on UNG, and then we'll also talk about cold, which is the one that I played. I actually went short on cold, which is a form of going long on natural gas. Okay, and I'll explain why I chose cold in today's video as well. These are going to be some of the things. It's mainly like production, storage, all right, and market balance, supply, demand are some of the reasons why you're basically seeing this bearish tone when it comes to natural gas. So we'll go over all of that in today's video. Be sure to smash the like button, subscribe to the channel if you guys are new. All right, and as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. If you want to, you guys can join the Discord. Okay, we have the Investment Intelligence Discord. This is that cold play that I was talking about. I went ahead and closed that one out. I mentioned that I was going to close it out this morning. And we'll break down some of the reasons why when we go into the charts. But you get access to all of the different trade ideas, different analysis. This was a screenshot from last week. Carnival is now up over 670% on that one. So that's been the play so far. Basically of the second half of 2022 was this Carnival trade. All right. If you don't want to pay for the Discord, it's only $10 a month, less than a cup of coffee a week. I do have a completely free newsletter for you guys, Investment Intelligence, giving out free trade ideas, free valuable finance content and trading content. This is what some of the trade ideas will look like, right? Highlighting the conditions on the chart, showing you guys the actual chart itself. And then, you can look through and see, which trade ideas fit your risk management. I try to sprinkle in 1 to 2 free trade ideas every single week in that newsletter. Okay, so sign up for that using the link in the description. This was a rising wedge here on SWK, and you can see we're targeting some of the areas to the downside, and you can see how that played out very, very nicely. Now, this is the most important chart in natural gas. All right, and this is the spot price, and it's the sub $2 chart. So this, yellow horizontal line here is basically $2, and when natural gas goes below $2, that is when I'm very attracted, right? I saw this huge puke right here. And starting off in the beginning of the year, I said, well, if it comes down to that $2 area, it may take a month, it may take 3 months, it may take a year, but typically natural gas prices tend to recover afterwards, right? And so that was my whole thesis behind it, was to, grab a starter position and average down as we went lower, being patient and ultimately waiting for the eventual recovery, right? And so I did that through UNG. I've never really owned Boyle shares before, but when I started making those videos, everyone was saying, hey, cover Boyle, cover Boyle, cover Boyle. So now I've included Boyle in all of, these analysis videos. But as you can see, sometimes we go down there for a very short period of time, such as here and here, and sometimes it's much longer, right? And sometimes it takes a while and consolidates here for close to a year, or sometimes even, just over a year, as we did here in the past. But eventually each time it's come down below this $2 price, it's eventually rebounded, right? And so there's many different strategies you can use to go long natural gas. You don't have to just trade, boil, cold, UNG. There's the futures, obviously, and then there's also natural gas related stocks and different ETFs that you guys can look at. I've made several videos covering those. But you want to pay attention to this again in the future, right? I mean, if the spot price was to come back down below $2, historically, it's worked out very well. You just have to have a good time horizon. You have to know that, hey, it could take a long extended period of time, or it could rebound back above $2 within a short period of time. So I just wanted to bring this chart to your attention. I think it's something worth, at least just setting an alert for at that $2 price on the spot price for natural gas for any potential opportunities in the future moving forward. Now, we'll go into the article a little bit here and talk about how it's just not meant to be. In summary, they're basically going over the lower 48 gas production. It's well above expectations. The storage balances look skewed to the downside. The outlook for 2024 looks bleak, and natural gas prices may continue to fall unless there's a significant increase in demand or production decreases. So when you look at the lower 48 production, the end result has now outpaced the expectations. They weren't supposed to hit around 106 billion cubic feet a day until late 2024, just ahead of the ramp up in LNG exports. So, with production running 1 year ahead of schedule, 2024 balances look all but doomed. The only way out of this is for Mother Nature to swoop in with one of the coldest winters in history, or else natural gas prices have much more room to fall. And so I know people will look at the chart of Boyle, for instance, and they'll say, well, that thing just made, new all-time lows. What do they mean natural gas prices have much more room to fall? Well, as we look at that spot price there, that spot price chart, you can see we're well above that $2 threshold at the moment. Okay, so when you look at the futures and when you look at the spot price, there definitely is room to fall if things wanted to reverse. Okay, and this has been some of the narrative. Now, you know, markets are driven by narratives, and so when you understand the narratives, then you can understand the price action. And you just have to remember that the narrative can flip in like on a dime, right? So this may be the bearish narrative right now, and then if natural gas starts pumping, you best believe that they're going to have a new bullish narrative. Okay. But Mother Nature, AKA weather, is definitely something very important you want to pay attention to as a natural gas trader. It heavily impacts the price and, the movement in natural gas. Now, another thing is going to be the storage. So assuming a very normal winter, we have natural gas storage balances, basically above their 5-year average. All right. And so, that's not really bullish for natural gas right now. That's evidenced here on the chart, but that's basically the summary of what it is that you're looking at on this chart if you can't break that down. And then, if you were to adjust for near-term bullish weather, they estimate the normalized surplus to be closer to around 3 billion cubic feet a day. And if you were to extrapolate this throughout 2024, it's not a pretty picture. Okay, so this is really kind of what's really been driving the market down, right? And this is why whoever wrote this article, it's titled it's not meant to be, and just kind of breaking down what's been going on. I know they call natural gas the widowmaker, and then I do a lot of coaching sessions, and a lot of people have come to me who have been trading things like Boyle, and are definitely experiencing and finding out why they call it the widowmaker, and it's something very difficult, right? To trade, and oftentimes you just have to be on the right side of the trade, and you can make a lot of money. When it skyrocketed to the upside, people were making tons of money, and then it started to reverse, and they just kept averaging down the whole way down, is what it seems like to me, from most experiences. Or people just kind of got in and weren't aware of some of the factors, things like contango and the different types of decay factors associated with Boyle. I have a really good video dedicated to those. You can just type in ZachlyTrades UNG Boyle decay, and it'll pop right up, going over all of the myths and facts surrounding those things. People will say that it's not possible to make money on leveraged ETFs because of volatility decay. That's not true. You can make lots of money, but you have to be in the trade during the right conditions. Okay. And to know what those conditions are, you want to watch that video, but there's definitely lots of risks associated with those as well. So sadly, ultimately, the takeaway from this article is straightforward. At the current production level, natural gas balances in 2024 look doomed. Their expectation is that production will fall in Q1 and into Q2, giving the natural gas market some more room for relief. And Mother Nature could always prove to be colder than normal, providing further relief. But as it stands today, balances in 2024 look awful, and the U.S. gas producers have time and time again proved why the nickname Mother Fracker was given. It's the nightmare that keeps on giving, like a horror film that never ends. The market may have to force discipline in producers by punishing prices lower. So now that we've gone through that whole, very bearish article right there, let's see what price action actually says here, okay? Because ultimately, I think price action is king versus some of the words that someone just wrote, and we did accomplish the initial goal here on the natural gas futures on the NG futures chart, right? Which was to retest this 350 to $4 region. Okay, we had this triangle pattern here. If you see here on the futures, we really bottomed out here right around April. And since April, we've been putting in higher lows, right? And we've been putting in lower high, we've been putting in higher highs, and we've been putting in higher lows this whole time here. All right. And so we were able to get that breakout above there, up to test that 350 to $4 region. And the reason that we're looking for this is because you can see here in the past, it was old support twice. So old demand, and we never really retested it as resistance, right? We came over here and just blew through it as support. And then it makes sense if we were to rally. And once we got that rally in natural gas, to come up here to this level and retest that area. And you can see we just really weren't able to consolidate up here and hold price action up here. Now we also broke through that $3 threshold, which we made plenty of videos. But basically, as soon as we got to that $3 level, you can see we exploded up past it. And that was a very big key psychological level. There was a lot of people who just weren't even interested in natural gas unless it went to that $3 level, and they were taking it long above there. And then it was basically like a key stop, like a mental stop for a lot of people. Hey, if it comes back down below 3, I'm out of the trade, right? And that's definitely what we saw, when it comes to price action. And you can see here we're breaking through that trend line here. Now this is a weekly chart and it's only Tuesday, so this candlestick can come up and close up back within that range, and that would be a bullish look below and fail. The reason it's bullish is because at this point, at the retest here, this is really the chance for sellers to come in, and the people, behind this bearish narrative to say that they're in control of price action, on the breakdown retest and push price lower. We also have a MACD that's getting very, very close to doing a bearish crossover here. Right now, the last time we had a bullish crossover was over here in April. And you can see we had that really nice rally. Okay. But here, we're on the verge of potentially getting a bearish MACD crossover. So that's something that, you definitely want to pay attention to, and look out for. We haven't really got it yet, so it's not something that's guaranteed or for certain, but it's definitely something you're going to want to monitor and pay close attention to. And when we zoom out to the nat gas futures monthly supply and demand zones, and again, we do this to get more of a macro idea, right? Just like we did over here, and we had a good idea of why this would be a good area to target and why we would see lots of resistance here looking back, years into the past. We're doing the same thing here now with a monthly chart. And we have this key demand zone that we've been testing and proven multiple times in the past. Each time that we came down to it, we saw strong demand. And we did the same thing this year. Okay, you can see really in 2023, we really consolidated in this overhead supply for pretty much the whole year, except for the past couple months. But each time we came down into this key demand zone, you can see price action quickly shot up out of there, right? We weren't closing anywhere near this level. As soon as price action came down here, we wicked back up. Okay, so we know that this is an area of entry, this is an area of entry, and this is an area of entry, right? And it just depends on what side is it, right? What side is going to control the price action. So we know over here, historically, buyers and demand have controlled the price action. So we're looking to go long here. And here we did exactly what we're looking for, right? Being that this was overhead supply, you can see we pushed down each time we came into there. But ultimately, this is what you want to do to break out of the zones, right? You want to absorb those supply orders, absorb those sell orders, absorbed. And for the whole year, we were filling all of those sell orders there. And then so at that point, the question becomes, well, are these people that, sold here, are they replacing their order over here, right? Well, maybe they replaced it here, maybe they replaced it here, but eventually it gets to the point where, people are just going to have to keep replacing every single sell order in that area, for it to continue to be a supply zone and push down lower. And eventually, after pretty much the whole year of consolidating in this area, we were able to break out. And, the areas in between these zones, these are what I like to call no man's land, right? These are areas where typically you're not really looking to enter because the risk to reward ratio is very skewed, right? You know the points of control. And so if you enter here, and you're targeting the upside, or even if you're targeting the downside, it's not very clear and you don't have very good defined risk to reward. Now, typically when you break through resistance or break through supply, you get exactly what we're getting here currently at the moment. You get a breakout, right, and a retest. And we came down to the very bottom of this zone, as we can see when we zoom in on the 4-hour time frame. Now, we also did have a gap to fill right here, right? You can see a gap in between these candlesticks. That's what the arrow is representing. And look at where we came down. We came down to that gap fill here, and that's where we started to get a rebound. So, I did go long on natural gas via short cold through some put options. And that was basically all of the thesis behind it. But as we looked at that weekly chart, I'm not really looking to overstay my welcome. I'd rather see things develop more. Okay. And I'd hate to not take profit on this long position, and then we end up rejecting this trend line here and heading lower. Now if we get that look below and fail scenario, there should be opportunity to go long again. And it's just a matter of looking for a good entry. Okay, so for right now, those are really the things that I'm looking at and paying attention to when it comes to like the futures. When we take a look at Boyle, we do have one of my favorite chart patterns, the inverse bump and run. And right now we're looking for confirmation. So an inverse bump and run is this prevailing downtrend, and then you have this aggressive bump down in price, and then the run in a typical perfect world scenario is going to run you back up all the way to where the pattern began. And so we do have some gaps up to fill here on Boyle, and that would coincide with us getting this run. But you can't necessarily just go off of the Boyle chart or just go off of cold or UNG. You really need to look at the futures. Okay, you remember that these ETFs are based off of the futures, and they so that's why I chart up the futures and things like that. All right. Now you can see here we did break through that trend line. All right. And so we'll look to see if we can get maintained momentum. The big thing you want to realize, though, is that, even if we were to sustain a little bit of a rally, we have old demand, old demand, old demand, and then we blew through it. Even if we were to get a rally, it could be potential, just a simple retest to end up going back down lower. So you would really look for price action to, explode through that prior demand zone that's now going to be overhead supply and overhead resistance. Okay, so that's basically what to look out for. Even if we do get a rally, you still want to be pretty cautious here, okay, because it could be just a simple breakdown retest to go back lower, and that's what you want to be prepared for. But for right now, I mean, if the bearish narrative continues in Boyle, and this is just basically a dead cat bounce or something, then it's very possible Boyle can head down to $28. Okay, so that's something that I'm going to be keeping an eye on. If you look at the RSI here on the daily, it's starting to curl back up. It's in very oversold territory, so it makes sense we're getting a little bit of a bounce, being that we're so oversold. We can see our MACD starting to curl. We would look for a bullish crossover here to give us a little bit more confirmation that, hey, we're starting to see a potential uptrend form here in Boyle, or at least some positive direction, maybe not necessarily, a daily chart uptrend. Right now, when we look at UNG, all right, UNG broke through its key level of 606. And then we had this level, this kind of line in the sand here at 581. And, we're saying, hey, we really need to hold and bounce here. There was a bullish divergence on the RSI. And I said, hey, we could, bounce off of that bullish divergence and then break through, and, bounce off of this support level here and then break through. And that's ultimately what did end up happening. Which is why we closed a lot of those long positions we had in natural gas, just because we wanted to, just protect ourselves, right? Because, I mean, things aren't too clear. The narrative is not on our side. And so, there are opportunities to take trades and make money. But, there's plenty of opportunities to let those profits go to waste as well. So you do want to protect those profits whenever you do have them. Now, UNG, we'd be looking to see, similar to Boyle, if it does rally, will it reject 581 and just continue heading lower? That's something that you want to pay attention to and be cautious of. But above 581, we have 606. We have 1, 2, 3 nice gaps up to fill on UNG. So, if we do get a nice strong rally, it's very possible price action can be drawn towards these gaps up to fill. Okay, the MACD is a little bit closer to curling over on UNG, and the RSI is a little bit more out of is slightly out of oversold territory versus Boyle still being in that oversold territory. And cold right here, we're looking to see, potentially was this a really tight rising wedge here? And cold gapped down pretty hard. The reason that I went short on cold is because I was trading natural gas via options, and so cold has a much higher strike price. And so options, if your option contract goes from out of the money to in the money, then it's going to increase in value more. And so with Boyle, a strong move in Boyle will result in less strike prices going from out of the money to in the money versus cold. You can see when we shorted it yesterday was up here around 85, 86, and if you got the 85 puts, those puts went from out of the money, okay, and then they went to in the money, multiple strike prices, okay. So that's just kind of a little bit of some options trading jargon and things like that. But that's why I chose to go short cold was because it offered, better premium, price action when it comes to the option contracts. Now, this could be the start of, a huge move down in cold, right? If this really is a rising wedge, there's lots more room to drop. But as we mentioned, that natural gas weekly chart just looks like something that we need some more clarity in, okay? Like something that we don't need to rush into right now. And we can sit on the sidelines and wait to see, hey, do we get that bearish MACD crossover on the weekly chart? Do we, break and retest that initial uptrend line? Or, does the MACD start to curl back to the upside, right? And do we get that look below and fail scenario on the natural gas weekly chart? That's something that we should see here relatively soon, within the next week or two, and then we can look for further clarity into potential price action in the future in direction on where natural gas can go. Now, that's it for today's video. As I mentioned, I do lots of one-on-one sessions, okay? So you can book those on the Ko-Fi page. There's a link in the description. You just click on commissions here, and you can directly book a 30-minute or 1-hour session. There's also this little buy a coffee button. It's basically a way to leave a tip or donation for the free valuable content I put out. And you can also request a specific YouTube video on the Ko-Fi page. That's where I do that now, just so they don't get lost in the comment section necessarily. Don't forget to join the Investment Intelligence Discord. That's where you can get all the different analysis, all the different trade ideas, resources we have available in there. You can join that for $10 a month, or you can sign up for the completely free newsletter, Investment Intelligence. The links for everything is in the description below, and you'll get, those free, trade ideas, and just in general free valuable content when it comes to trading and finance in the markets. Okay, so thank you guys for watching, and I'll see you in the next one.